we've got Michelle Dean here from Peritus Corporate Finance, the lovely Michelle, who you've seen quite a few times. They do support a lot of our events. Just a 10-minute quick discussion on the commercial mortgage market. We're also going to touch a little bit on Airspace as well. So over to you, Michelle. What's happening in the marketplace?
Okay, well, obviously things have been interesting over the last few months, and we are seeing more lenders returning to the market, and I don't think we'll see the heady days of, in development finance especially, of 70% of GDV, 90% of costs, and really high loan to value bridges. But we are seeing 65% as probably the new 70 at the moment, and lenders coming back in the market. Some are still out, or some are still very, very low, like 55%. So really they don't want any business. They don't want to say that they don't want any, but at 55% they're not going to get any. But we still have a good number of lenders that have got money in their pocket and they do want to lend. The biggest problem that lenders have is that they have an excess of income, an excess of money that hasn't been lent over the last 3 months. So they're in a situation where they would like to lend. So we've got a lot of lenders that are getting in touch with us to say if we've got any deals that we can discuss with them. So that's a really good for us to be able to place deals. So that's kind of in the development market. Bridging has been, nothing has really changed with bridging other than the rates have come, so the loan to values have come down marginally, and rates have probably gone up a little bit, but not much.
Is that just to account for the risk factor?
Yeah, I think people have just gone, oh, everything's going a bit mad, so we'll just up the rates a little bit. And they may well bring them down, and not everyone's done that, and people came right out of the market and they've come back in again, which is really good. And then really the same for like buy-to-let portfolios and like structured finance, like commercial finance. The only big no-no at the moment on commercial finance is retail. It's a dead duck for nearly every lender I've spoken to. But saying that, if it's retail below, residential above, and it's a small shop with a lease, or just a small shop with maybe 3 flats above, people will look at semi-commercial like that. But if it is straightforward retail, it's really difficult to do at the moment, unless you're talking about the likes of Iceland or Aldi.
Food shops.
A big food shop.
Yeah.
Other than that, it's a no-no. Yeah. And student accommodation, as is the norm, it is popular, but some lenders are specific to certain universities and areas that they will lend in, and they will look at and to see if the area is overexposed. So just something to bear in mind on student accommodation.
Is there specific regions in student accommodation? Regions as in, Liverpool or Manchester? Are there actual places where there's a big question mark for oversupply?
No, not at the moment. I think that's specific to each lender rather than a whole over the country. And some lenders go by like the top 50 unis. Or even the top 30, and they'll only lend in that area. But they're not the type of lenders that we'd normally place with. We know the type of lenders that we would go to. But I think the main point that I wanted to get across today was that funding is definitely out there, and people are starting to get back on site again, and they are wanting finance, and we can help you with that.
Are you finding, I know we talked about bounce back loans and mortgage holidays, are you finding that's affecting like remortgages or taking out? I know Jake mentioned it last week on the buy-to-let update. He said you just need to have your story straight about why you took a mortgage holiday or a bounce back loan as well. What do you find?
Well, we've just started to do quite a few CBILS loans, which is very easy and straightforward. And we have been told categorically that CBILS and bounce backs should not adversely affect your credit score and should not give a lender a reason to say no because you've had one. Now it's very early days, so I haven't come across a lender that has been asked to fund somebody that's got a bounce back or a CBIL. But I think it would be harsh if lenders start to say, well, hang on a minute, you've had that, which obviously means that you've been in trouble. But no, it doesn't mean that. It means you've needed some help over a particularly tough time. And if the government didn't want to help us, didn't want to help the SMEs, then they wouldn't have put it out there. So at the moment, I can't say that I know that there's a reason why bounce back CBILS and that kind of thing will adversely affect anything that you want to do going forward. But Jake's absolutely right in saying you need to make sure that the reasons why you took it, you can not evidence, but you can talk to them about it and say it's because of this and that. Not just, well, it was the coronavirus, so we took it because we could. It's you do need to think about that. But
and just on the last point today, the government has announced the relaxation of airspace and the new PD rules, and we're going to be doing a video on this really soon. But I just wanted to get your take on what the appetite for lending is for this new PD routes.
Okay. The new PD route is too early for me to know what the appetite is, but I can talk to you about air rights, which it's an interesting development proposition, air rights, because what do you really have security over? The right of the air. But we've done air right developments, and I currently have an air right development going through. We've got lenders that were interested in doing this prior to COVID and are still interested when I approached them 2 or 3 weeks ago. So we've started that process with them. It is a very niche market. Not every lender will do it, and you would need to put down quite a deposit because I don't think people are going to do it 65%. You're probably going to be, because it's deemed as more risk, you're probably going to be at about 60% of GDV, around 80% of cost, something like that. But yeah, air right development is, I find it quite an interesting proposition. So yeah, if anybody has any air right questions or are thinking of doing one and want me to have a look at it, I'm more than happy to do that.
Yeah, that'd be fantastic. We're going to do a series of a deep dive into the new PD and having a look from the view of the architect, the developer, a planner. So maybe we'll get you back on board in about 4 weeks or so, just to see what what's happening, a bit more about PD, etc.
Because it'll have been out for longer then, and we'll have people coming up to us asking us about it. So we'll have a much better knowledge about what's happening. But that's it's another great area to get into, to actually be able to build up, because there's not a lot of spaces to be able to build out. So going up is a good idea.
I mean, what I'm seeing, like in Derby, is it wouldn't work, for example, because the cost per square foot of selling that space isn't there, and the build cost is the same as it is down south. So it probably doesn't work in a lot of regions throughout the UK, but it's definitely something, for us to keep our eye on for future.
Oh, for sure. Yeah, definitely. If you're in an area where good properties, all the good ones have been snapped up and been PD'd already, and you are looking to do something, then actually looking up to the roof line of places is definitely worth considering. Yeah, for sure.
Well, thank you ever so much. We're at the end of our time there, but thanks again, and we'll see you again next week. So thanks a lot, Peritus Finance. And you can catch up with Michelle. I've got the description below, Michelle and Jake's email addresses and contact details are below in the description if you want to get in contact with them. Lovely. Thanks a lot, Michelle. See ya.
Thank you.
Bye.
Bye everybody. Bye.